This happens every time tariffs are imposed by the United States. But what exactly are tariffs? Tariffs are duties paid on goods imported into the US. The most common type are ad valorem tariffs, Latin for according to the value, which represents a fixed percentage tax on the value of the imports. These are the tariffs Mr. Trump imposed as a 25% import tax on goods shipped from Mexico or Canada, such as avocados or lumber. Another such type of levy are tariff rate quotas, which are taxes triggered by receiving a specific import threshold. For instance, this type of quota was first used by Trump in 2018 on washing machines when the first 1.2 million imported units faced a 20% duty, while the units above that number were taxed at a 50% rate. And the impact is significant for Americans. While everyone can expect to see an increase in the cost of goods at the grocery store, the tariffs will impact some people more than others. Those in dark blue states will see a greater impact from the tariffs, while those in the light blue states may not see much of an impact at all. Tariffs also affect people differently depending upon how wealthy you are. The impact on the poor will be very different from the impact on the rich. Increasing tariffs raises the prices on everything, from groceries to gas to the goods you buy on Amazon. Tariffs also affect the stock market and interest rates. Certain stock sectors will fall while others rise. So let's take a look back through history and see how tariffs impacted Americans in the past. Then we'll look at the impacts Donald Trump's tariffs will have on Americans today. Finally, we'll take a look at the impact the tariffs will have on the stock market and discuss which stocks might fall and which stocks might rise. From 1790 to 1860, average tariffs increased from 20% to 60% before declining again to 20%. From 1861 to 1933, the tariffs increased to 50% and remained at that level for several decades. From 1934 onwards, the average tariff declined substantially until it leveled off at around 5%. Tariffs remained at 5% until the year 2000, when they started declining again until eventually settling out at around 2%. But something happened in the 1930s that caused tariffs to start going down drastically. In 1913, the 16th Amendment was added to the U.S. Constitution. This change allowed for income taxes to be collected. The income tax started out quite low in 1913 and gradually increased until 1964. In 1953, the IRS was created. Thanks to public outreach programs, the IRS was able to better enforce the paying of taxes, which caused more people to pay and resulted in more money flowing into the Treasury. With more money flowing in, the income tax rate was able to be reduced from 70% in 1965 to just 31% in 1992. But when tariffs were lowered to 2% starting in 1992, the income tax rate had to be increased, going from 31% up to 39% for the top income brackets. So the general idea is the government needs to raise taxes in order to provide services to the American people, things like the military, Social Security, and Medicare. This can be accomplished by raising tariffs and lowering income taxes, or by raising income taxes and lowering tariffs. That's why when Donald Trump announced these tariffs against Canada, Mexico, and China, he said this.
She said no tax on it. How about just no tax? You can do that. You know, if the tariffs work out Like I think a thing like that could happen if you want to know the truth.
But if Trump does actually eliminate income taxes, it might not be the best thing for Americans. For the past 25 years, the average tariff has hovered around 2%. As you can see on this chart, in 2019, the average tariff temporarily spiked to 14%, and that was the last time Trump raised tariffs. And here's what happened when Trump raised tariffs in 2019. When Trump raised tariffs in 2019, he didn't just raise them once. He actually raised them 4 times. That means Trump might raise taxes multiple times here in 2025, with multiple rounds of retaliatory tariffs causing the tariff taxes to go higher and higher and higher. The 2019 tariffs directly impacted consumer electronics and toys manufactured in China. This affected stocks like Apple especially hard. Apple fell 19% in a single month when the tariffs were announced in 2019. Ultimately, though, that drop turned out to be an incredible dip buying opportunity as the stock soared 91% over the next 7 months. But did Trump's tariffs actually benefit American workers? It depends upon which workers we're talking about. Workers who produce the specific goods covered by the tariffs typically benefit from the protection. While it's difficult to pin down exact numbers, the tariffs on steel products appear to have helped create several thousand jobs in the steel industry. Similarly, tariffs on washing machines are associated with approximately 1,800 new jobs at Whirlpool, Samsung, and LG factories in the US. But any benefits for workers in import competing industries need to be balanced against losses for 2 other groups of workers. First, many workers are employed in factories that use imported goods as inputs in their production processes. And when these imports increase in costs due to tariffs, it harms their production, often leading to job losses. Second, when the U.S. unilaterally imposes tariffs, American trading partners often implement retaliatory tariffs, which may limit U.S. exports, again, ultimately hurting workers in these industries. In general, then, Trump's tariffs have helped some workers and hurt others. Nothing is particularly surprising about this. Trade policy almost always has an important distributive effects, and any change in trade policy is a choice to benefit some groups at the expense of others. And Trump's 2019 tariffs didn't just impact American workers, they also impacted in other ways as well. U.S. consumers ended up paying more on specific goods that were taxed under the tariffs. By and large, American importers and, to a lesser extent, American consumers paid for the tariffs set during Trump's first term. U.S. importers ended up paying more for goods from China and passed some of those costs along to consumers. Many firms were expecting the tariffs to be temporary, so they delayed the pass-through onto consumer prices. The longer the tariffs last, the more we can expect the burden to be passed on either onto consumers or exporters. And sectors targeted by retaliatory tariffs in 2019 took an especially hard hit. Retaliatory tariffs didn't just reduce employment in agriculture, but also employment in transportation, warehousing, and business services in affected regions.
John, a number of headlines flying right now out of the Oval Office where President Trump is speaking with reporters. We're reading these off of the wires as they're coming. So what we're learning now is that President Trump says nothing can forestall those tariffs from taking effect on Canada, Mexico, and China sometime tomorrow. It'll be 25% on Canada and Mexico and 10% on goods imported from China. On oil and gas specifically, he says that Canadian oil, there will be an exception here. The tariff on Canadian oil will be down to 10%.
Over the weekend, President Donald Trump announced tariffs on Canada, Mexico, and China. Donald Trump said these tariffs are going into effect to encourage other countries to reduce the number of illegal aliens and drugs they are allowing into the United States. While trade accounts for 67% of Canada's GDP, 73% of Mexico's GDP, and 37% of China's GDP, it accounts for only 24% of US GDP. As a result, these tariffs are expected to hurt Canada, Mexico, and China more than they hurt the United States. But make no mistake about it, these tariffs will hurt Americans. A 25% tariff on all imports from Mexico and Canada will make consumer prices go up. Oil, fresh fruits and vegetables, auto parts, and chips used in electronics like phones and laptops will all be impacted. The Tax Foundation, a bipartisan think tank, estimates that a 25% tariff on Mexico and Canada and a 10% tariff on China as a tax would increase overall taxes by $1.2 trillion. Trump has celebrated the idea that the U.S. government would receive more revenue through tariffs, but it would ultimately be U.S. consumers footing the bill. But just like in 2019, the price of everything won't go up. Instead, it will only be the prices on goods that are directly impacted by these tariffs. The goods imported by Canada that will most likely be affected include wood, charcoal, aluminum, iron, steel, cereal, rubbers, alcoholic beverages, carpets, wool, umbrellas, cotton, photographic goods, cork products, and printed books. Items imported from Mexico that will be affected include cereals, paper products, fruits and nuts, tropical fruits, tomatoes, onions, lettuce and cabbage, pickled foods, fruit juice, fertilizers, dairy products, eggs, honey, cotton, beer and hard liquor, coffee, tea, meat, fish, seafood, sauces, seasonings, baked goods, avocados, and raw sugar. And the items imported from China that will be affected include fish and crustaceans, vegetable fats and oils, vegetables, especially corn, soaps, lubricants, waxes, candles, cereal, coffee, tea, spices, sugar, cocoa, dairy products, eggs, honey, vinegar, apple juice, and garlic. So the prices for those goods are expected to increase, but there are other things that will increase as well. We talked about food prices going up. Fuel and energy prices would also go up, but only for those states which get their fuel from Canada. And Trump has also limited the impact of this by reducing the tariffs on Canadian energy products from 25% down to 10%. Those living in northern states will be most impacted by this, although those living in Illinois, Wyoming, Colorado, Oklahoma, and Texas would also be impacted. Cars and car parts would also increase in price. And Tesla could be hit especially hard. 5 months ago, Canada implemented 100% tariffs on Chinese-made electric vehicles.
Shortly, we will be introducing a 100% tariff on Chinese-made electric vehicles.
And now Canada is threatening retaliatory tariffs against the United States of 100% tariffs on Tesla vehicles. This will no doubt threaten Tesla's stock price after its parabolic rise over the past few months. Steel is another item that will see an increase in prices, which could hurt manufacturing here in the United States. Beer and alcohol prices would also rise, especially on tequila and the #1 beer brand in the United States, Modelo. And the applications are vast for softwood lumber. 30% of what the U.S. uses annually comes from Canada. And just like in 2019, electronics, toys, and appliances from China will all be affected as well. What will really hurt Americans, though, is how these impacts will disproportionately affect the poor and middle class. Because the poor and middle class spend a much larger percentage of their income on gas, food, and consumer goods, the rise in prices will affect the poor and middle class more than it affects the rich. What we do know is that temporary tariffs will not have much of an impact for American consumers, as businesses tend to hold off on raising prices in hopes that the tariffs will go away in the near future. The only way these tariffs will have a major impact on the U.S. is if Donald Trump decides to keep these tariffs in place for many, many years. However, if the increase in tariffs coincides with a decrease in income taxes, then the higher prices Americans pay for their groceries, their goods, and their gas might be offset by a lower amount of taxes Americans pay to the IRS. And while the rise in consumer prices is expected to be delayed, the impact to the stock market will be immediate. The stock market plunged on Friday after the White House confirmed tariffs would begin on Saturday. And with prices about to rise, resulting in more inflation, investors are losing hope that the Federal Reserve will cut interest rates this year. And now the stock market is preparing for further declines. As of the recording of this video, Dow futures were down over 1%, S&P 500 futures were down nearly 2%, NASDAQ futures were down 2.5%, and oil prices were up 1.6%. The immediate impact of Donald Trump's tariffs is a sell-off in the stock market. But what does history say will happen to the stock market from here? In 2018 and 2019, Donald Trump also raised tariffs, and the economy did just fine. The stock market initially sold off, but then recovered. While the stock market did fall 6% in 2018, it rallied over 28% in 2019. And like we discussed earlier in this video, some stocks could fall significantly more than others. But just like what happened in 2019, any significant sell-offs could be significant buying opportunities. For now, you might want to avoid stocks that are especially prone to being hurt by tariffs, such as Apple with their phones coming from China, Tesla with Canada threatening 100% tariffs, and Amazon with the majority of what they sell coming from China. But some stocks are expected to rise. Stocks that track commodities such as oil should rise, and Trump is leaning towards increased deregulation. That holds the potential to drive windfall profits for banks, big tech, as well as selected healthcare and energy companies. And crypto should benefit as well. Trump has been a strong supporter of digital assets and cryptocurrencies. He promised to build a government stockpile of Bitcoin at a conference earlier this year, while also pledging to fire U.S. Securities and Exchange Commission Chair Gary Gensler, who opposes cryptocurrency. If you want more trade ideas over the next few months, consider joining the Stock Dads Discord. Last month, our traders had an average 76% win rate, and they made an average profit of 52% on each of their trades. You can get more information about the Stock Dads Discord at the first link below. And as always, don't forget to like and subscribe. And if you want more market insights throughout the day, make sure to follow me on X at Real Scott Curry.